Hello viewers in this fine hour. Now, let's talk about my favorite subject in trading, and that is trend trading for sure. Because why? Well, I have been long proponent on trend following, and I have always said this is one strategy that works because it has proved itself from time to time. And if you know me, I always said that approach is very simple to create but tricky to execute, and everything relies on risk management, right? Well, if you know my videos, you know I have said something like that. Or moreover, if you are my client, and I have always said that you have minimized the gains and minimize minimize losses and maximize the gains. That's correct interpretation. Like for instance here, where we have choppy markets, we have tight stop losses where we are whipsawed 5 or 6 times in a row. And then once trend prices closes above trend line, we go long and capture all these moves. So we have made money from June 2020 till early 2022 on S&P daily stock. Simply see when prices close below or above trend line and just trade when market says so. We could do that with S&P 500, we could do that with dollar index, we could do that with what we have here with gold futures, whatever. We could see from 2018 then till 2020, and then till late 2020 there were huge move in gold. Dollar was rising where everyone was saying that crypto is next currency or whatever. But here's the thing, trend trading works. I have said that. That's my point of view. But now here's the funny thing. For some random reason I stumbled on this report somewhere at LinkedIn, I believe, and this is no other than one of the premier investment banks in the world, HSBC, and they basically are saying that trend following strategies then they can help in portfolio construction and provide market insights. So they're saying that trend trading works, like quote unquote here, trend following strategies has been around for at least 50 years and have maintained a favorable profile of robust returns, positive skewness, near zero correlation, and convex payoffs with respect to equity markets over the years. And these strategies perform particularly well in prolonged bear markets such 2000 till 2003, 2007 till 2008, and from 21 till 2022. So this means they are saying that for the last 50 years they work, and they work particularly well in times when everyone else is losing. And here they are, that I believe this is their funds and their performances, which says that from 2000 they are more than fourfolded their best performing strategies or more riskier strategies. And I say this is good performance because it doesn't correlate with overall equity markets, and they make money when S&P is losing. That's their view. This is like correlation between their strategies, which doesn't say much for you, and this shows how it has outperformed all of the bear markets against stocks like 2000 and 2003. Like the trend strategies go up, markets go down. Same as in 2007, 2011, like in global financial crisis of 2008, and now in 2020 and 2022. So basically when markets are falling, trend following is rising. So this is something that I have said, and let's see their approach. This is HSBC, this is not my approach. They are showing that basically they have a trend line, we have a prices, and they are showing like illustration between oil and oil trend following, I think, which I don't know which kind of trend following, or moving average it is, but basically they are using their trend following system with moving averages. Like when trend is up, which is closing above trend line, they are buying and consequently shorting when it's below trend line. So it's from their perspective it sees something like that, but it's really inconvenient for us to see that. But anyways, you get an idea. could see upward trend, downward trend, and yes, 12-month moving average, which is like indicator of trend following or trend in works. So I wouldn't go into details because I don't want to sell you their strategies. I want to show my strategies. But nevertheless, this is good indicator how that works. And this is, for instance, the markets which they use as their approaches, like precious metals, industrial metals, soft commodities, energy, foreign exchange, fixed income like treasuries in and government bonds, yes, and equities, and of course Libor and interest rates as well. I think this was only Libor, yes. So they basically made portfolio from all of these strategies, so one market cancels the other market if one is going badly. I think this is like performance of their strategy. Yes, this is basically, they are showing how they are working with their strategies. I think it's moving average crossover, but it's not the difference whether you're using moving average or moving average crossover. That's simply indication when trend is working. So I wouldn't go here also to details, I'll just show you their approach. Yes, this is their approach with major indices. Okay, they are showing their product performance, which is not my job to do that. I don't want to sell their products or promote them. I just illustrate here the point. And they are seeing how they are performing if they implement trend following in your investment process, which is something I am proposing all the time in my strategies. Only I have been doing this way before the S&P is doing their papers, if you look at my work. Basically that means that they are making the same returns with less volatility. I wouldn't go also here in details, and also I wouldn't comment on detail these volatility forecasts and how returns are risk adjusted and whatnot, because it's really not the point of this video. But it shows that it performs well in volatility and reduces overall portfolio risk. That's what the HSBC shows. I use this, as you see, this is from June 2023. So if you look at my work and my comments, you see that I have been showing this way before that. So it's not that I am copying their strategies. We are kind of both taking the same idea and interpret in the way we see fit. But here's the point. The point is that trend trading works and my approach works. It's not my words. Also, guys from HSBC has shown that for last 50 years it works, and this approach is here to stay, and you have to be blind to ignore it. So question is whether they are showing the same approaches for like day trading or some sort of support resistance trading or some market forecasts based on Fibonacci levels. Well, no, because these approaches not work. They are either representations of the same chart in different flavor, or basically they are gathering past data so the future looks good and there is nothing else. That doesn't work. What works is something that has proven from time and time, and this is trend following. And I probably would show you a couple of more examples of works of this strategy in long term, so you could see my point in more detail, because it's important to, I think it's important to separate good strategies from bad strategies and things from that work and that doesn't work, especially in trading, because trading is so filled with scams and unbelievably bad approaches which simply gives wrong impression of financial markets, and my job is to clear that and to show that there is right way and it's proven on facts. So stay tuned, wait for my next videos, and make sure you are seeing all my content, because even if you are just a subscriber, this information is valuable and it will help you. So bye.